Good morning. This is Japanese Economic Review Channel. Let's review yesterday's market activity. On March 26, 2026, the Japanese market experienced a sharp reversal, with the Nikkei 225 ending its three-day winning streak. This shift was driven by the geopolitical seesaw, where initial optimism from the U.S. session was quickly replaced by renewed uncertainty during Tokyo's trading hours. Yesterday, WTI crude oil acted as the ultimate arbiter of market sentiment. While the U.S. market initially rallied on news of potential de-escalation, the pendulum swung back as oil prices spiked in after-hours trading. This transmission of energy price volatility directly triggered a risk-off response in the Nikkei, highlighting our current sensitivity to Middle Eastern opacity. Looking back at the March 25th U.S. session, markets closed with significant gains. The NY Dow rose over 305 points, fueled by reports of progress in U.S.-Iran negotiations, which sent WTI prices plunging below $70. Tech leaders like ARM and AMD saw heavy buying as investors anticipated lower energy costs, setting a positive but ultimately temporary tone for the global market. The positive momentum from Wall Street was neutralized during Tokyo's pre-market hours. As conflicting statements regarding ceasefire negotiations emerged, WTI futures rapidly recovered above $73. This overnight pivot forced Japanese investors into immediate risk-averse positioning, turning what began as a buying opportunity into a defensive session. Consequently, the Nikkei 225 closed yesterday at 53,603, down 145 points. The intraday volatility was striking. At one point in the afternoon, the index hit a low of 53,176, a drop of 572 yen. Market breadth was decidedly negative, with 983 decliners nearly doubling the 549 advancers on the prime market. Sector-wise, 21 out of 33 industry groups declined yesterday. Heavyweights in insurance and tech, such as MS&AD and Advantist, faced significant selling pressure. Conversely, we saw a clear capital flight toward commodities. Mining stocks like Inpex and shipping firms like NYK Line rose as they served as natural hedges against rising energy costs. The TSE Growth 250 Index suffered a sharp plunge yesterday as rising oil futures triggered a, quote, flight from duration. Major growth names like PowerX and Astroscale saw severe sentiment deterioration. In contrast, a few standard market anomalies like Minato Holdings managed to close higher, showing that selective buying still exists despite the macro headwinds. Away from the macro noise, corporate Japan continued its digital transition yesterday. Rakus announced a significant update to its Assist AI for sales management, and Takachiho Koheki prepared for a facial recognition POC to combat shoplifting. These strategic deployments indicate that the structural trend of AI integration remains resilient regardless of daily market fluctuations. Sustainability also remained a key focus in yesterday's news. Obayashi moved forward with promoting renewable diesel for construction machinery, while Sumitomo Forestry commenced operations at a new factory in Fukushima. These projects highlight a long-term commitment to decarbonization and regional expansion that transcends short-term geopolitical volatility. Innovation in the consumer sector provided a stabilizing contrast yesterday. Morinaga launched its nostalgia-themed Milk Caramel to capture the retro coffee shop aesthetic, and MOS Food Services introduced limited-time jasmine cream milk tea. These developments show how companies are leveraging niche branding to maintain consumer interest during uncertain times. In summary, yesterday's session was a textbook example of how geopolitical headline risk dictates equity momentum. While WTI crude prices continue to drive short-term sentiment, the underlying corporate activity in AI and sustainable infrastructure remains strong. Moving into today's session, we must remain vigilant of energy market shifts as the primary indicator for risk. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.